Good morning, everyone, and thanks for being with us today. Welcome to the 2021 edition of the LuxFLAG Sustainable Investment Week. But before we start, we at LuxFLAG, we would like to take a moment to thank you for all your support during these very difficult last months since the tragic passing of Sachin Vankalas. Sachin was a great human being and a tireless supporter of sustainable finance. He exemplified LuxFLAG with his passion, ambition, and drive to move to a sustainable future. Thank you. Now, in my role as Acting General Manager of LuxFLAG, I'm very pleased to see that after 2 editions, the LuxFLAG Sustainable Investment Week has already gained recognition. And that is thanks to LuxFLAG's associate members who are showcasing this week where they are in the sustainable finance journey. Given the financial industry is on different stages on that journey, this week is about sharing best practices. So where are we all, and how can we all advance towards the goal of making all finance sustainable at one point in time? For the 3rd edition of LSIW, we thank you for all your positive recognition of this, and with a response of over 3,500 registrations. This is simply amazing, and I'd like to also thank our host partners as well as our media partners. The 25 sessions over the week will cover the latest trends and most pressing issues in sustainable finance. We hope you find them useful, but also find inspiration in the progress being made to harness finance to help find solutions to our current environmental as well as our social challenges ahead. Now, a few words on the housekeeping. The slides and the recording of the sessions will be made available to you sometime after LSIW. For Q&A, please actually use the chat function at the bottom right of your screen where you have the 3 dots. In case we don't get to have time for questions at the end of the session, because the session now is actually our largest panel today, the questions will be forwarded to the host, Allen Overy, for subsequent responses to you directly. Now, talking about the session and turning to the panelists we have here today, I'm very pleased to introduce this second session of today, hosted, as I said, by Allen Overy. Allen Overy is a global law firm that for almost a century helps businesses to grow, innovate, and thrive with Allen Overy's commitment to think ahead and bring original solutions. I'm really looking forward to hear from the panel their views on how to approach ESG and sustainability in the context of the future of pensions. For that, I'm pleased to say that we have with us today Gerd Gebhardt. Gerd is the Administrative and Commercial Director at PECOMA. We have also with us Ralph Richards, Senior Project Manager, Business Development and Consulting at M&R Partners. We also have with us Dr. Hans van Merten, University of Utrecht, and a member of the Occupational Pension Stakeholders Group at IOPA, as well as Martin Kateda, CEO of Allianz Pension Partners. Moderating today's sessions is actually Codrina Constantinescu. She's a counsel at Allen Overy here in Luxembourg. Codrina advises on general investment fund and regulatory matters, such as on the structuring and fundraising of regulated and unregulated alternative investment funds. Codrina, the floor is yours.
Thank you. Thank you very much for your introduction. And I'm very happy to be the moderator of this interesting panel that will speak in the next couple of minutes about sustainability and ESG in the context of pension products. Let me first set the scene and raise maybe the first question. As we all know, we will focus mainly on IORPs and the PEPs in the following couple of minutes, which are the most relevant pension products, private pension plans that are available at the moment. Therefore, my first question goes to Hans. In order to ask him to define better the purpose of IORPs and PEPs, and then in order to be able then to approach ESG matters for those 2 products. Hans?
Yeah. Thank you, Codrina, and welcome to all of you, and happy that you are all joining this seminar on ESG and pension funds and PEPs. In this first part, I will quickly introduce what is an IORP and what is a PEP exactly, because I noticed not only in the Netherlands and in Luxembourg, but in most European jurisdictions, there's a little bit confusion over what an IORP actually and a PEP actually is. And also there's some confusion about the question who can offer a PEP. So I will first quickly deal with those issues in order for you to get an understanding of the scene we are talking about. Okay, next slide, please. First of all, what is an IORP? And I took the definition from the TORP Directive, and please read with me. It's an institution for occupational retirement provision. IORP means an institution, irrespective of its legal form, operating on a funded basis, established separately from any sponsoring undertaking or trade for the purpose of providing retirement benefits in the context of an occupational activity on the basis of an agreement or contract agreed individually or collectively between employers and the employees or their respective representatives, or with self-employed persons individually or collectively. So that means that an IORP is basically a second occupational pillar construction, so a collective scheme funded, on a funded basis, so no pay-as-you-go systems there, established separately from any sponsoring undertaking, so apart from the sponsoring undertaking. So that is in brief an IORP. Of course, this definition differs per member state because this is minimum harmonization, And in fact, member states are to a certain extent, of course, free to shape basically an IORP to their wishes, but these are the fundamentals. So next slide, please. The PEP.
Sorry, no, it's the next one.
Yeah, the PEP. What is a PEP actually? So instead of the IORP, which is an institution, the PEP is a product. It's a retirement product. So IORP, again, institution, second pillar. PEP, often referred to as third pillar, individual product. It means a long-term savings personal pension product, which is provided by a financial undertaking eligible according to Article 6 under a PEP contract and subscribed to by a PEP saver or by an independent PEP savers association on behalf of its members in view of retirement, and which has no or strictly limited possibility for early redemption and is registered in accordance with this regulation. So PEP, individual pension product. A few providers can offer a PEP, but often is a PEP referred to as an individual pension product, but according to this definition, it also means that it can be offered by an independent PEP savers association. So very importantly, a PEP collective agreement is also possible. That's sometimes a bit in the discussion, not enough highlighted, I think. So who can offer a PEP? That's in Article 6 of the regulation, the PEP regulation. Credit institutions, so banks, insurance undertakings, according to Solvency II, so insurers, institutions for occupational retirement provision, so IORPs, pension funds, can offer a PEP according to national law, UCITS and AFMD. So they can all are eligible to offer a PEP. So the idea is once you have a passport of being active on the basis of a European regulation or directive, bank, insurance company, whatever, you are eligible to offer a PEP. Okay, thank you very much. So this sets the scene a little bit, Kodrina, and then we can discuss further on, of course, the ESG and the SFDR requirements. Thank you.
Of course. Thank you very much, Hans. I think this is very useful because those a couple of slides show already the various interaction that can exist between IORPs and PEPs. And
Okay.
obviously, there is an incidence on how SFDR and taxonomy will apply to those two types of products.
Exactly.
But maybe just let's go one step further and discuss with Gert what are the impacts of implementing ESG risk and ESG factors factors on pension funds, so mainly on IORPs. I know, Gerd, you have an actual reviews, so it will be very interesting to know how ESG risk and ESG factors will impact the liability side on the balance sheet of an IORP.
Well, thank you very much for being able to participate in this session. Well, I think the first finding is that ESG has already arrived in the world of pension funds. So, for example, in August, there was a report that the Fonds de Compensation, which is the reserve pension fund of the first pillar scheme in Luxembourg, has moved to more sustainable investments amid pressure from Parliament and environmental groups. So this highlights another important part of ESG, which at the moment particularly is at the outset a societal and a political program, rather than a pure financial device. And there are indeed great expectations for the participation of pension funds in this political and societal program. So, for example, it has been said that the long-term investment horizon of pension funds and the diversified portfolio structures they have are two of the principal enablers of ESG. It has also been stated that ESG can potentially enhance stakeholder returns, and that companies with higher ESG ratings are more competitive. And you can all see that this leads up to a but. The but is the following, and again I quote from recent literature. Pension funds could be a formidable force in getting companies to embrace ESG values, yet they must align those goals of ESG also with their fiduciary duties. And this is going to be the focus of the presentation here. I think it would be fair to say that with these great expectations of ESG, we have then moved directly to the compliance requirements of SFDR and taxonomy, as they have already been mentioned, and which will be explained a bit later. But there are three, I think, preliminary questions that need to be also reviewed in that context. One of them is ESG investment compatible with the purpose of pension funds? The second question is, what impact does ESG have on returns? And the third one is ESG a useful concept for investments? Now, I will also quote one of the main articles of the constitution of a pension fund, or its statutory obligation. What is the purpose of a pension fund? A pension fund is a collection of funds and their investment, and the objective is to spread risks and optimize yields for the members. So that is respectively Article 5 and Article 25 of the Luxembourg Pension Fund Law. And so the main and principal obligation of a pension fund is to spread risks and optimize yield. It also mentions that ESG should be taken into account. The next step then is, does ESG actually produce positive returns, i.e. is it in line with the objective of a pension fund? At the moment, the data is not conclusive, and we will no doubt cover that in further sessions during this week. Again, I quote a study from Wharton in May this year. Even the best available data is not convincing the skeptics that ESG improves returns. What is certain, that ESG is a cost driver. So it does, in the short term at least, create compliance cost and therefore may be a danger to returns. There is even a warning that we need proof that ESG works in terms of return as well. Otherwise, it might be thought of as a fad in 12 months' time. So there is still a question over the whether ESG actually improves returns. Everybody is expecting it will do, but it's not certain.
Yeah.
The other thing which is related to ESG and which will be addressed in the next by the next speakers of this session is what the state of ESG at present. Significantly, there is a project called Aggregate Confusion Project, for example, at Stanford, which tries to address the wide range of ratings that are used in ESG, the sometimes questionable quality of metrics used in ESG, and obviously the phenomenon of greenwashing, which has already been addressed in Luxembourg. So those are the main questions that arise in the context of ESG and pension funds at the moment, and it will be interesting to see how these questions are going to be addressed in the next 12 months or so, if that's all we have. Thank you.
Thank you very much. Maybe just one more question for you, Gerd. Considering the current environment, do you see a trend coming from the employers' side requesting more revenues rather than ESG integration, or employers are rather oriented towards ESG because obviously most of them, they are also in the scope of ESG?
I think the most tangible manifestation of ESG is that everybody's been forced to comply with SFDR.
Yep.
And that for many of the pension funds that we see, and we don't see that many in Luxembourg, we know that the success of pan-European pension funds has been, to put it politely, modest. But it has been the first impact of ESG on the pension fund side appears to have been the compliance requirements and the costs, obviously the costs attached to that. There's been very little question or answer what it does to returns.
Understood. So for the time being, we are facing a dilemma, I would say, in this respect. But I think we should be able to find solutions and be able to continue to integrate properly ESG factors and ESG risk within the investment policy and risk management of pension products. And now I will like to turn back to Hans, just to have a couple of words from him with respect to the application of SFDR to pension products, because I think it's important to know what is already applicable to them and what are the compliance requirements at the moment, knowing that obviously in the future there will be new requirements coming in. And probably this will increase cost if we have to go back to what Gerd was saying. But let's see first how IURPs and PEPs are in the scope of ESG requirements.
Okay, thank you, Codrina. Yes, Gerd, of course, you're right. The success of IORPs, of cross-border IORPs, basically is still lacking. In my view, that was one of the reasons for introducing a PEP in the first place, you know, to make it easier to offer a cross-border pension scheme in this case. So in my view, it's not written black and white, you know, but that was the main reason for introducing a PEP. And a very interesting now construction occurs where IORPs can offer a PEP. And I understood, I'm not a Luxembourg pension lawyer, but I understood from Luxembourg pension lawyers, and Codrina, maybe you can help me with that, and as far as the legislation in Luxembourg is now concerned, is that a Luxembourg IORP, so second pillar, can offer a PEP. And maybe Rolf, you can tell a little bit later about the initiative also you are exploring, because it will be very interesting if an IORP, second pillar, can offer a PEP and thus falls under the SFDR both ways. So both on the IORP side and both on the PEP side. So that's interesting to know. Next slide, please. What we will see then is the following, that a financial product, according to the PEP regulation, so that's the next slide, already, yes, exactly. So the financial product, according to the SFDR regulation, is a pension product, so a PEP, and a pension scheme, so offered by an IORP. So that's very interesting. So In the SFDR regulation, the financial product, is seen as a pension product in a pension scheme also. And especially the latter, the pension scheme, is also in the Netherlands debated. Is a pension scheme a financial product, or is it more a social arrangement? And the FSDR regulation makes it pretty clear that it is a financial product. That's very interesting also from a point of view which regulations, which legislation then is applicable to the IORP, which offers a PEP. So next slide, please. We see in the regulation written that ESG factors are important. Of course, yeah, important. What does it mean, important? Important for the investment policy and risk management systems of a PEP provider, including thus an IORP. And PEP providers should be encouraged to consider such factors in investment decisions and to take into account how they form their part of their risk management system. So this is the PEP regulation. The information on ESG factors should be available to IOPA, to the competent authorities, and to the PEP savers. But this is applicable to PEP providers in the PEP regulation. Next slide, please. So it's important to realize that in the PEP regulation itself, there's written something about also IORPs. So, for example, here, the PEP benefit statement, also offered by an IORP then, should also contain key information on the investment policy relating to ESG factors and should indicate where and how PEP savers can obtain supplementary information. The PEP benefit statement, so sort of a kit, if you will, should be provided annually to a PEP saver. So very interesting what happens there. So you see a sort of a clash basically between the IORP and the PEP ESG factors. Because if we, next slide please, if we go to the IORP 2 regulation, it says the following. Yeah, this does not preclude an IORP, so PEP provider also, as we saw before, from satisfying the requirement by stating such information that environmental, social, and governance factors are not considered in its investment strategy policy, or that the cost of a system to monitor the relevance and materiality of such factors and how they should be taken into account are disproportionate to size, nature, scale, and complexity of the activity. So the PEP says, okay, you should provide this information, but the IORP says no, but you can also refrain from those information if necessary. That's interesting because there we see, again, a sort of a clash between the ESG requirements in the PEP regulation and the way you should communicate to your members in the IORP directive. So what is the future then? I think is the following. An IORP should offer, at least in Luxembourg, I hope they will, a digital PEP compartment. So if you are an IORP, second pillar again, make it as simple and easy as possible by offering a digital PEP compartment, easily cross-border. You can read the PEP regulation. It is much easier to be cross-border than an IORP is. An IORP is very difficult also to be cross-border, but the PEP is not, at least. It's not supposed to be difficult. And the PEP prevails over the IORP in my view, because the PEP is a so-called lex generalis, as it were. So a special kind of regulation which prevails over the directive EU law-wise. So that's very interesting. So the requirements in the PEP directive prevail over the IORP directive. So what you should do, what you should structure then is an IORP which is completely PEP, ESG, SFDR, and EU proof in my view. And there are no pillars, but is this second or is this third pillar? It doesn't really matter because I always say the PEP is pillarless. So that's what I think the future is. Thank you very much, Codrina.
Perfect. Yeah, that's indeed very interesting. And as you mentioned at the very beginning, the PEP is really focusing on personal contributions, while IORPs, they are focusing on contributions related to an occupational activity. So the employer's contribution will not be qualifying as a PEP, but the employees, so the personal contribution could qualify as a PEP. And therefore, I fully agree with you that it is indeed possible within an IORP already to create several compartments and most probably to have dedicated compartments that then are presented as a PEP or are taking the PEP label.
Exactly. And we should no longer think in second or third pillar, in my view, because the consumer in the end doesn't really care if it's second or third. They just want to have a good retirement provision, you know. So let's make sure, at least in Luxembourg again, that these products and these vehicles are possible, I would say.
And probably if we have a compartment that takes a PEP label, then it is highly possible that the ESG factors need to be considered further at that level. So I don't think it is possible to do just an Article 6 statement, Article 6 SFDR statement saying that we don't think that ESG factors have an impact on returns or have a limited impact on returns. We should probably go further and explore the Article 8 SFDR options. Maybe just in relation to this, I'm turning to Ralph now. I think the practical view, if I may say so, it's highly important in this context. Ralph, maybe you can tell us a couple of words on your new IORP in Luxembourg. And in particular, of course, you can explain more on how ESG factors and risk have been taken into account in one of your compartments.
Sure. So thank you very much. Good morning, everyone. Thanks again for giving us the floor to exchange a few ideas or, let's say, hands-on experience in putting together what we heard the last 25 minutes. So as Kodrina just mentioned, we are in the process of setting up a Luxembourg-based IOP that will be offered, of course, to multiple employers. One key challenge, I would say that one of the main challenges we are facing is confronting ourselves in the definition of an investment strategy that we can have a sensible balance between investing sustainable and keeping the returns or even improving the returns, and at the same time not having to pay higher fees. And that goes back to what Gerhard mentioned earlier, that pension fund obligations is to make sure that that returns are being delivered. You know, that's a key obligation of a pension fund, and also that we don't have higher fees. So this is a pretty tough challenge for us trying to find the right balance. You know, that being said, we have engaged with one of our close prospects, which is in the progress of joining the IOP that we are going to set up. And what we did with this prospect is mainly trying to engage with the prospect and start a few, let's say, initiatives, mainly around the awareness of SFDR, because SFDR is something that is it's there and it's going to be there, and we have to just obey it. You know, there's no way you're going to, you know, get around it, or there's no way you're going to forget it, or, you know, so we have to stick with it. But I think what we learned in the process of implementation is bringing awareness. So what we actually did in the engagement with this prospect is that we try to explain what actually the SFDR regulation means to them as an employer joining the IOP, and how we're going to tackle it. Now, this also leads to the responsibility of the pension fund, or let's say the IOP, in order to go and shop for SFDR, let's say Article 8 compliant products. There's not many products that are around that offer this kind of thing, because it's new territory at the moment. And we obviously have to somehow collect definitions up front, or let's say pick up the requirements up front, so that we can go and shop the right product, right? So we, again, going back to our prospect, we engaged with this prospect to define, or let's say to talk about with the prospect about the environmental and social characteristics of such a Article 8 product. Then we also ensured that these products that we are going to look for, I mean the investment products that we are going to look for, have the proper governance. They have the proper remuneration structure, and also a clear tax and compliance around it, so just to get the picture. And with that specification in mind, then we started to shop around in the market to see how many Article 8 compliant products could we find in order that we can incorporate this and offer it to the customer. And obviously, we will hear later on from some of our partners how we manage to interface those two together. So also, what's very important perhaps to mention is, as what Hans explained, the bringing the awareness to the end beneficiary. Talking about the pension benefit statement, which shows, also declares exactly what the Article 8 investments are going to look like, and give as much information as possible to onboard them. And as I said earlier, there's no way out of this. And as a pension provider, it's our obligation to be in compliance with this, but at the same time, also making sure that the price doesn't go higher, and that the employers and the sponsors who are participating should continue to pay the costs that they occur, and at the same time also to keep the returns higher. And that's exactly what we are mandated to do, because if we don't get those two parameters right, I think we're going to fail. So that's, in summary, a key challenge we are working on, and we are quite confident that there are providers around the market space that already line up to this, and that's what we are working on right now.
And thank you very much, Ralph. I think your example is excellent, because in fact you are structuring this new IORP in the middle, if I may say, of the new entry into force of the legislation. So
absolutely.
So it's a real challenge in the end, because we don't have any type of precedence yet, and just maybe to give optimism for the future, we have already an Article 8 product. So of course it will be maybe a bit more difficult to do an Article 9 from the beginning, but your first compartment is targeting an Article 8 SFDR alignment, which is, I think, already an excellent achievement, considering, as I said, the entry into force very recently of SFDR, and also the absence of final RTS for the moment. So
absolutely right. Just to add to what you just said, so we from the specification and the engagement with the client, the information we received helped us to kind of go out and shop for an Article 8 solution, right? Which we successfully have. We're going to hear more about it later in this panel, and obviously the next step would be going for an Article 9 as well. That's correct.
Exactly.
But I think the ultimate goal here is the engagement. I think there's much more, the classical pension fund world, right? In the past, we as beneficiaries to a pension fund, we just do not know what on earth is going on there. We just get a statement at the end of the year with a number in there, and that's about it. That's no longer going to be the case, So we have to be more transparent, and also demonstrate to the end beneficiary exactly where the journey is. And also disclosure, and be open on costs, because the cost transparency is a key. And also now going into the SFDR world, that we also demonstrate the whole, let's say, the components around the SFDR. So awareness, again awareness, and for the third time awareness. That's the key.
Perfect. Thank you very much. I will just turn now to the other side, if I may say so, to the investment side, because you just mentioned that you looked for an Article 8 product and you analyzed the market, and obviously you found Allianz as a very large player in the offering for investment solution for pension funds, which I think is great. I think it's an excellent opportunity to listen from Allianz and from Martin today, how Allianz is developing Article 8 and Article 9 products, and trying to obviously strike the balance between returns and greenness. So if you can give us more information, Martin, that would be good.
Happy to do so. Good morning to everybody also from my end, and thank you very much for having me. And before turning to products, just allow me 1 second to explain our dual role as Allianz in those kinds of markets. Because as one of the largest asset holders in the world with 2 trillion assets under management, we are on the one hand managing our own assets in our life insurance companies, for example, on behalf of some policyholders. So we're basically providing SFDR relevant products, especially via IORPs. It's also embedded in myself because I'm not only CEO of Allianz Pension Partners, advising pension funds and clients how to invest their money, but I'm also member of the board of Allianz Pensionskasse here in Germany, which qualifies as an IORP and offers products under the IORP regulations. And on the other hand, as I just stated, we're providing investment and asset management solutions to institutional investors, especially to pension funds. And in both worlds, basically, we are part of this, let's state it, a conflict between caring for the fiduciary duties that Gerd was relating to and managing performance. And our goal as Allianz in each kind is to provide decent and stable investment returns for our customers in the long term on the asset management side, as well as on the insurance side. And we had to make up our mind ourselves how we would like to incorporate ESG factors in our own insurance products. And let me state that we made our mind long time ago. We joined the UNPRI standards in 2011, and we at Allianz, we think that ESG matters and it's a factor in investments. And the business rationale behind this is quite simple because it might affect returns. Gerd was also referring to it because there's the political will to enhance the regulations toward ESG factors. And what we see right now is that we can optimize our risk return profiles since regulation is a driver of performance and of the returns of individual companies. And it will be even more so in the foreseeable future. And when coming to the products right now, what does it mean in concrete for our business? Our insurance assets, the assets that we are holding for our life insurance policyholders, for example, they take ESG into account. We have embedded an ESG regulation framework within Allianz. We also have functional rules on ESG investment here within Allianz. And basically, this means that we can offer on the insurance product side right now at the moment also to Ralph and his pension fund, for example. And we're doing this also in the German market for pension funds, Article 8 products when you invest on the balance sheet of our life insurance company, Allianz Lebensversicherung here in Stuttgart. Investing on the balance sheet, we call it a capitalization product, is by definition not a product because it's not under SFDR regulation, but we are following the rules of the SFDR regulation on a voluntary basis. And that's basically the offer we could make to Ralph. This is the insurance part. The other part is the asset management part. So what kind of UCITS funds, for example, could we provide to pension funds or investors, or also personal investors in the third pillar when it comes up to ESG factors? And there we have to clearly define the goals together with our clients. So we have to offer a menu card because the client, the pension fund, the pension occupations, the pension institutions first have to make up their mind how do they calibrate or strike the balance between ESG factor as a value-driven concept on the one hand and the fiduciary duty that Ralph was just referring to. Our conviction is that taking ESG factors into account can probably not enhance profit, but there are some studies that we get the same performance probably with a lower volatility, and taking ESG factors into account can also be an mighty tool in risk management to manage to hedge tail risks and to avoid major drawdowns in the markets. Just think about the pandemic that we went all gone through, because companies that are more likely to follow ESG rules basically are not in the risk of being affected that much by regulations. And so on the asset management side with the UCITS funds, right at the moment, we offer all kinds of products. ESG risk assessed are 100% of our assets under management. But then we have also ESG risk focused solutions under Article 6 of the SFDR regulation, which we can offer to our clients. There are no exclusions in there if clients do not want this, except some may exclusions we have on a group-wide level, but that's a different story. And then right at the moment, we also have 20% of our assets under management within Allianz Global Investors, for example, that are sustainability focused and comply to Article 8 under the new SFDR regulation. To be honest, Article 9 still is the most difficult way to pursue, because impact focus is right at the moment not so easy, because simply data and standards are lacking. What is really creating sustainability index? We're talking about green bonds, and we have an invest and UCITS fund which is investing in green bonds, where we try to assess how the proceeds of the bond emissions, bond issuance are basically invested. But that's a sector which is probably growing in the future, but needs more technical standards that are commonly regarded in the future. So, but the most important thing is talking to our clients, bringing together their values and also their preferences with regard to performance, and offering them the right product to manage the transition to the new world here.
Exactly. Yeah. No, that's very interesting. And I think given Allianz size, this is extremely important, because you will have a very important part and a very important say in how future looks like, I would say, from an investment perspective. So the fact that you are already orienting yourself quite a lot towards Article 8 products shows exactly that we are probably taking SFDR and taxonomy very seriously. At least in this first year of implementation, which, as I said, it's really the first experience, if I may say so, for all of us. But indeed, I think that at Allianz you have a very important role to play, and we can also show by taking Article 8 products, right, that we are taking this seriously, and that we are not overselling or greenwashing, because we could use Article 9, but if we don't have sufficient information for Article 9, then it is better to take, I would say, the compromise, to make the compromise of an Article 8, and see afterwards if we can switch to an Article 9.
That's right, Kodrina. May I add just one more idea at this? Because we always, as an investment company and also as IORPs or PEPs, we have to take into account that right now, when it comes to the SFDR regulation, we're just in level 1.
Yes,
so
correct.
Right now, we're on a prudent man principle, and a principle-based way of regulating. And when it gets really interesting is when level 2 will take effect from the beginning of mid-2022, when we probably have more concrete information and standards on how ESG criteria have to be assessed in the investment. So when the taxonomy develops, when the RTS, the regulatory technical standards come into effect. And this is something we as an industry have to work all together to get a common understanding of what will be the interesting things in the future. And right now we have to be honest, we also have to try and to proceed step by step together with our clients. And we have to develop the framework all together.
Correct. Yeah. No, I fully agree. And I think that also, I mean, the panel that we had today, it's very useful because we were able to basically to cover all the aspects of the pension product in the end. So we covered the pension product itself, we covered the investment, we covered the actuary side, and I think this shows exactly that we need synergies to develop a SFDR framework and taxonomy framework within pension product. But we are for sure on the good way, and we will all be aligned most probably to work towards these ESG goals going further. I think we will end up the session here unless we have some questions in the Q&A. I will just check.
Well, can I make a short remark,
Yes.
Katrina? Also, it's not specifically ESG related, but it is PEP and IORP related. And also then, of course, ESG and SFDR, the applicability thereof. You said in the beginning, and that's of course true, that the PEP is indeed an individual product. So there is no employer contribution in principle. But it can be. So, for example, we're looking into constructions also where a collective PEP basically is shaped within an IORP. So that's a very interesting concept also for multinationals. You know, if you can offer a PEP on a collective basis, be it by an IORP or an insurer or whatever, it doesn't really matter anymore. You know. Then it's really interesting. So PEP is often perceived as a purely individual product, but it doesn't have to be. That's what I'm trying to say here. Yeah.
Can I, if I may add just one more thing to what Hans just described. So in our journey engaging with prospects, we also have noticed that the PEP can be also implemented within a corporation. So it doesn't have to sit standalone as an individual product or a solution. It can be also within the corporate. So a corporate could also offer a PEP, meaning a corporate can say, okay, I want to have a corporate scheme, and I also want to have a PEP at the same time, and both can be picked up by the same provider. You know, so that's a possibility.
Yeah.
There is maybe one other comment to that. Which also needs to be taken into account particularly when these sort of PEP structures are being looked at, which is the thorny matter of taxation.
Yep.
Mm.
Which, whilst I think at the product level, we're seeing that the borders between the different pillars are, well, being taken down. On the tax side, it still very much depends on what the countries do, and
yeah, definitely.
Tax tends to be a thing which is very slow to change, even if sometimes the signs look otherwise in other areas.
Right. And I think maybe just to add on this, I think it's important also that PEP has been introduced by a regulation. So there is the direct applicability into national law, while IORP has been initially introduced by a directive. So there was a bit more, how can I say, liberty or freedom on the implementation of IORP, while for PEP we will probably get things more aligned at the EU level, which I think it's a positive trend for pension savings in general, right?
Definitely. Individual pension savings.
Exactly, yeah.
Very good. Thank you very much, all. And I mean, that was actually an excellent panel, I must say. So thank you all for your contribution, and also special thanks to you, Katrina, and our host, Allen Overy, for basically having provided us with this good session. Also, I would like to express a big thanks to our entire LuxFLAG team for having made this all possible, to give you also the platform to actually educate us and the industry with these thoughts. Actually, I would like to finalize this session with a note that I hope actually that will resonate with you, because it was actually when Ralph was talking about the practical challenges in structuring an IORP. when trying to find a sensible way to combine meaningful ESG impacts and balancing them with return and cost for end beneficiaries. So there seems to be a lot of engagement needed with prospects and with stakeholders, which is key,
Yes.
which basically made him conclude that the three top important things are awareness, awareness, and a third time awareness. So thank you very much for that. Now, actually, our next session will start at the hour, now at 11 o'clock already, hosted by BNP Paribas and focusing on blended finance and private equity, the sustainable development revolution. So stay tuned. And again, thanks to this panel, thanks to Katrina, and wishing you a great day. All the best. Bye-bye.
Thank you very much.
Thank you very
Goodbye.
much. Have a
Thank
good
you.
day.
Yes.
Bye-bye.
Bye.
Bye.
Goodbye.
Thanks.
Goodbye.
Ciao.